Welcome to HowStreet.com Radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim. It's good to be back.
Well, you were just in New York a week ago, and it must be just totally shocking for you to see the damage that's been done to the city that you were raving about. You had such a good time as a tourist checking out stuff.
Well, it really is. You know, some of those places in Lower Manhattan, I was actually walking around, and then to see them under this debris and see these cars tossed around like little toys, it's really sobering. One other thing about it, you know, New Yorkers really know how to pull together and to deal with things, and I'm sure that they'll come out of this just fine. But on a little selfish note, thinking about, good grief, if we were still there at this time trying to fly back here, for example, or even trying to get around the city, just think how disruptive that would be. The chances of us getting a flight anytime soon would be about zero. So I really feel for the people who kind of caught themselves in between trying to fly in or trying to fly out, or who maybe didn't put enough things aside. So definitely a lot of concern there.
Well, talking about New York, we were wondering if that would affect the demand for silver, because so much of their electrical infrastructure underground has been flooded out. Silver, very important for sensitive electric equipment. And also just generally people have no idea how much gold and silver goes into, say, a computer or something like that. Also, you were talking about people are putting more money into physical precious metals. And especially, they're looking at silver. What's going on there?
Well, you know, this is a big secular trend change that has been commented on by several analysts last week. The Casey research team talked about it at length, and others have noted it. David has talked about it. And the thing is that the real price over the long term of the metal will be determined in the physical market itself. The paper trades a lot more dollars, but when it really comes down to it, it's the supply and the demand piece that causes people to pay X amount for the metal. And I think a lot of people that still don't have silver yet as a core position think, well, you know, if there becomes a shortage, I can just go out and buy it pretty close to what it's selling for. But what they don't realize is that the premium can go through the roof. And this is not just true of silver, but anything that's in great demand. And so whereas the premium for an ounce of silver might be 75 cents now, it could be several dollars an ounce in extremis. This happened in the 2008 meltdown where silver dropped down to the $9 area, but you couldn't find any physical silver for under about $12 or $13. So the paper price and the physical price were completely disconnected. And if we end up with a demand push going forward, you know, with the supplies not being quite what the demand, you know, expects, you could see a very large premium develop in silver. And this could be true of any other precious metal where there's a great demand for it.
Well, do we have a lot of physical silver available, and do we have new properties coming online where they're going to be producing more silver?
Well, we do, and actually the global supply of silver is on an uptrend. In other words, it's increasing. So, you know, on the one hand, the supply, there's just silver out there. There's no doubt about it. There's not a shortage now, but the demand is very robust, and it's kind of unpredictable from the investment side. You know, we can kind of figure out a certain amount for the industrial, what that would be, but that's also increasing too. So the fact is that even as the amount of silver that's available is in an uptrend currently, the demand from both the industrial and the investment side is increasing too. So it's almost like, you know, two horses running alongside each other, and, you know, how would that play out?
Well, if there's a big demand for silver, does that mean that people should jump in now? Or again, you know, we don't know what's going to happen with the election. It's so close. We've had a major disaster on the East Coast, and people probably will be thinking more about, at least for the 60 million people there, repairing the roof or pumping out the basement rather than investing. Does that give the sharp investor kind of an in that maybe other people won't be looking at right now?
I think so. You know, we just don't know how to quantify the election, and either way, you know, whoever is elected, we're still going to have these systemic issues that have to be dealt with that in some ways maybe are just going to have to keep getting worse until they get to the point where, you know, something substantive has to be done. But I would say beyond the idea of the storm and the election, for an investor who wants to add to their physical position or who hasn't taken a position yet, the markets are fairly quiet right now. So you want to get in there when prices are not gyrating all over the place and when premiums are a little softer. you don't want to be going there when those prices are moving up or down $2 a day on silver, because then the spread gets very wide. So the wise investor who's decided to take a position it would be good for them to go in and look where they are now. And it's possible that silver could drop a few more dollars an ounce. So, you might choose to buy in tranches, just like we talked about the mining stocks. You take a third of what you'd like to have now, and then you say, okay, if silver drops $1, I'll buy another third, and you can do it that way. And so, no matter what happens, you'd have some physical silver, and if the market goes where you think it would, then you get all or most of your position filled at a more favorable price.
Well, I know some gold mining companies in the recent past have held on to their gold, hoping that the prices would go up. Are silver producers doing the same thing, holding on to it instead of putting it out there for people to buy?
This is a fascinating question, and I have an answer for you. And, we usually don't mention company names on the show, and so I won't do that this time. But a diligent individual can find this information out, and certainly a subscriber to the Morgan Report, and certainly someone who attended the Silver Summit would know the answer to this, as to who this company is. But it's a company that David and I have held in our own portfolio for a number of years, and it's in our mid-tier recommendation. But this company withheld silver during the last gyration that we had earlier in the year, and when the price rose, we had that strong movement up through the latter part of the second quarter and into the third quarter. They sold the silver that they had held back at lower prices for $5 an ounce higher than they would have gotten for if they had sold into the current market. And this is not speculation. This is simply good business. I mean, farmers withhold their grains to get better prices and things like this. And I think sensibly done, this is a very powerful concept for a company. It benefits the shareholders. It benefits the management and the company running itself. And I'm surprised that more companies don't do this, and it doesn't have to be an all or nothing bet. It can be a sensible amount. And so this company has done this. They've done it on several occasions, and I really applaud them for it. And they're doing the right thing, in my view.
So in other words, no panic in getting rid of it at fire sale prices. Hold on to it until you know you're getting the price it's actually worth.
Right, and there's a certain amount of judgment based on this, looking at technical analysis and whatnot, and judging the mood of the market. But management has shown, because they've done this several times, they've shown that they have a very good feel of the pulse of the market, and that is something that's really powerful. So maybe not all companies are adept like that, and maybe not all companies have that kind of cash flow. But this is an example of a kind of a company that's going to be that is a thoroughbred racehorse now in terms of its profitability and its growth curve. And when you see management doing that sort of thing and doing it sensibly, you go, that's just one more reason that I really feel strongly about this company, and I'd like to really consider having it in my own portfolio.
Last weekend, you were at the 10th Annual Spokane Silver Summit. Anything new or interesting there?
It was very well attended, and this is a little different type of a conference than a lot of the ones you see out there. The people that come there are very dedicated and serious individuals and investors, and they're there to learn and to double check what decisions that they've made, and they don't waste too much time. It's just a whole different energy, and I really like it a lot, and it's right up there with a couple of the January conferences up in Vancouver that I think are really good. And what I like to do when I go myself is each year I find one idea that causes me to rethink a company or an approach, and I go home and do more research, and then I generally act upon that idea. And each year that I've done this, whether by luck or design or a little bit of both, I've profited from the changes that I made in my portfolio because of my, this new idea. And this particular one I brought home this time was a company that I've held for several months. It's very profitable, but I had no idea just how positive the direction that they were moving in was going to be, and how strongly management was hewing to their core principles and carrying those out. And so what I want to do is have more of that company, but rather than going and buying tomorrow at the market when it opens and adding to it, which maybe would be the right thing to do because I think it's going to do very, very well going forward over the next year or so, what I want to do is see if I can buy my new shares a little bit lower. So I'm hoping that I can buy 10 or 15% below where that market traded last week. And I may not get filled, but you know what? If it goes down there, I'll be happy and rooting for lower prices so that I can get more of those shares rather than just going out and putting everything I have into that company because I, quote, know it's going to be a good investment. and then seeing it drop 10 or 20% and feeling kind of depressed. And so it changes the whole energy, I think, when you look at it this way, rather than to try to go out and do everything you can right now. Try to pick up some of the lower price, and this is what I really think is important to look at as an investor.
Well, you've emphasized in the past that taking a look at the management and how they deal with the company is very, very important, and finding that out before you put your money in.
That's really true, you know. And this particular company gave a company presentation to the attendees, which I listened to, and we interviewed. David Morgan interviews many of these companies, the ones that we feel kind of have the best potential, and these go on the website. Many of these video interviews go on the website for subscribers. And this particular company, I happened to do the interview myself, and I had spoken with this CEO several times in the past over the last year or so. And I really found out that yes, this person is doing exactly what they said they were going to do a year or so ago, and they're doing it in a real sustained way. And this is the kind of company that I want to have a position in.
Well, have a beautiful Halloween and a safe one. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com.